Welcome back to a Real Estate Wisdom podcast. This is your host, Vishal Kapoor. And boy, do we have a juicy episode for you today. We're diving headfirst into the sizzling hot topic of Canada's new mortgage rules and how they are turning the home buying game on its head. Will this new rule help first-time home buyers achieve their dream of homeownership? Well, we will see. So grab your coffee and let's get into it. All right, let's cut to the chase. The federal have dropped some bombshells set to go off on December 15th, 2024. The insured mortgage cap is skyrocketing from 1 million to 1.5 million. First-time home buyers and new build purchasers can now stretch their mortgages to 30 years instead of 25 years. Folks, this is the biggest shakeup we've seen in Canadian housing policy since I started selling real estate. That's what I can tell. But what this means to you. So now let's break this down with a real life example. So picture Sarah, a 32-year-old tech whiz in Toronto. Before these changes, her dream home at 1.2 million was just out of reach. But now she is eyeing that sold sign with a gleam in her eye, with the lower down payment requirement and smaller monthly installments. Sarah's homeownership dreams just get a whole lot closer to reality. But let's see how the market reacting to it, because it's different for one person to other. Here's what it gets interesting. The market's buzzing like a beehive that's been whacked with a stick. Some brokerages is betting on a 5.5% price hike in Q4 2024. CREA is playing it cool with a 0.9% prediction for the year. Home sales are expected to jump by 5.2% in 2024. Rest over like whatever months we'll have left. But hold your horses. It's not all sunshine and rainbows. Let's look at potential benefits and concerns. And these changes offer both opportunities and potential risk. So what are the benefits? Increased accessibility for buyers, especially a high-cost markets like Toronto and Vancouver. Lower monthly payments due to longer amortization period. What my concerns? Potential for increased debt loads as buyers carry mortgages for longer period. Possible upward pressure on home prices due to increased demand. Concerns about financial stability as longer amortization periods are associated with a greater potential of financial stress. Regional roller coaster, Calgary riding high with an expected 8% price surge, while Vancouver's cruising at a more modest 3%. And it's like comparing a rodeo to a leisurely canoe ride. The waiting game. CREA's calling for a holding pattern until spring 2025. It's like the whole market playing a giant game of freeze tag. Debt dilemmas is there. Longer mortgages mean more debt, and it's like supersizing your meal. Satisfying now, but you might regret it later. So, my concerns, potential for increased debt load as buyers carry mortgages for longer periods. Possible upward pressure on home prices due to increased demand. Concerns about financial stability, as longer amortization periods are associated with the greater probability of financial stress. Now, look into the global aspect. Let's zoom out and look the bigger picture. The US and global economy are like the nosy neighbor who's always peeking over the fence into Canada's backyard. With the US Fed hinting a potential rate cuts, our Bank of Canada might follow suit. Lower rates could mean even more fuel for the real estate fire. And let's not forget about global investors eyeing our market like it's the last slice of pizza at a party. Well, do I have a crystal ball? So I don't. So what's the forecast? Well, if I had a crystal ball, I'd be skipping, I will be sipping a scotch on my private island instead of hosting this podcast. But here's my take. Several key factors are expected to influencing housing prices in the coming quarter. And recent interest rate cuts by the Bank of Canada are starting to impact the market, but their full effect may not be felt immediately. We haven't seen much. So, and the other thing is the introduction of new federal policies such as 30-year amortization, which we're talking about, for first-time home buyers and a higher cap for insured mortgages could boost demand and potentially impact prices. Continued affordability is a challenge in some markets, may temper price growth. Overall, while modest price growth is expected in the next quarter, the market is anticipated to remain in a transitional phase. More significant changes and potentially a stronger price growth are forecast for the spring of 2025. As the full impact of policy changes and interest rate cuts takes effect. And that's what my opinion is. That's what we'll probably see. We're looking at the market that's reviving its engine. And these new rules are like nitro fuel. They will give us a boost, but we might see a frenzy in the short term, especially in those $1 million plus properties that were just out of reach before. But remember, real estate is a marathon, not a sprint. And these changes aren't a magic wand that will solve all our housing woes. We still got supply issues, tighter than a skinny jeans, and affordability remains a big question mark. These new mortgage rules represent a significant shift in Canada's housing policy landscape. While they offer new opportunities for some buyers, they are not a complete solution to Canada's housing affordability challenge. Potential buyers should carefully consider their individual financial situations and the long-term implications of larger mortgages. As we move to 2025, we will be watching closely to see how these changes interact with other factors like interest rates, housing supply, and overall economic conditions to shape the Canadian real estate market. That's all for today's episode of the Real Estate Wisdom Podcast. Remember to subscribe for more insights into Canada's ever-changing housing market. Until next time, this is Vishal Kapoor signing off. That's all for today's episode of the Real Estate Rundown. If you found this exciting, as I did, smash the subscribe button faster than a bidding war in downtown Toronto. Until next time, this is Vish signing off and reminding you, in real estate as in life, the only constant is change. Stay Stay savvy, Canada. Bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.